afternoon and welcome to a partnership webinar between JumpStart and KeyBank with today Ricardo Thomas and Jessica Best from KeyBank for our first of a 3-session series on mastering your money to improve financial wellness for business owners like you. I'm Lauren Smith-Petta and I serve as JumpStart's Director of Education. JumpStart strives to provide you with access to the knowledge and resources you need to make your small businesses bigger and better. You can always visit our website to explore some of our other educational opportunities for small businesses and tech companies. All right, obligatory housekeeping. Before I introduce our presenters today, a couple of housekeeping items. This presentation session will fall between 60 and 90 minutes with included time set aside for Q&A. Our presenters may ask you to participate throughout, so please place your comments in the chat section, which is where you should be able to contribute. You're welcome to introduce yourselves there at any time. You can also see the Q&A, which is a great place to put your questions as they occur to you, and we can address them at the end. Also, at the end of today's session and in a follow-up email, you'll receive a brief survey. We really value and appreciate your feedback and perspective. It allows us to continue to bring in only the best experts and entrepreneurs to teach valuable lessons. All right, without further ado, allow me to introduce our presenting subject matter experts today. First, we have Ricardo Thomas. Ricardo Thomas, a Cleveland native, has been with KeyBank for nearly 7 years. He began his career as a part-time teller and worked his way up to branch manager, a role that he has held for the past 1.5 years. As a small business owner himself, Ricardo understands the unique challenges of entrepreneurship and is passionate about helping small businesses thrive. Beyond his work at KeyBank, he is actively involved in his community and volunteers with the Class Act, a nonprofit organization dedicated to social and health awareness initiatives aimed at improving lives. Welcome, Ricardo. And then we have Jessica Best. With over 15 years of experience in the financial services industry, Jessica Best is dedicated to supporting small businesses and strengthening communities. She has developed a deep understanding of the challenges small businesses face and is committed to fostering economic growth. As the regional community sales manager, Jessica collaborates with local organizations, community leaders, and KeyBank branches to promote financial confidence and expand access to resources. Her commitment to community development extends beyond her professional role. She actively volunteers in local initiatives focused on improving economic opportunities and advocating for small business growth. Outside of work, Jessica enjoys watching her 3 boys play sports, including basketball, football, golf, and tennis. So she has her hands full. So Ricardo, Jessica from KeyBank, welcome.
Thank you.
Thank you. So good morning, Jump Starters. I want to say thank you, Lauren, for that introduction. I really appreciate it. So I just want to start off by saying welcome to our workshop on credit scores and repairs. So we're gonna look at some of the agenda and the topics that we'll cover today. Just you got it. All right. So we're gonna cover, let me see. So what I want to let you guys know is that your credit can have a big effect on your life. Your credit report provides a snapshot of your financial habits that institutions, cell phone companies, and others use to get a sense of your credit worthiness. So understanding how credit scores and reports work can help you keep your finances healthy and help you achieve your goals. So by the end of this workshop, you'll be able to explore the importance of credit scores and reports, learn how to access information in credit scores and reports, discuss strategies to build and improve credit, and how to identify how to protect credit and from incorrect claims and fraud. Let's see. So before we jump in, we're going to take a quick pre-assessment designed to gauge your knowledge prior to the workshop. So I want you guys to write your answers in the chat, and I'll go through the 6 questions we have for you. So with number 1, what is a credit score? Number 2, which of the following is a key method for improving your credit score? Number 3, your credit score may impact which of the following areas of your life? And number 4, which of the following is not one of the 3 credit bureaus? And number 5, which of the following is the most important factor when calculating a credit score? And number 6, which of the following is a red flag or a sign of credit repair scam? So I will give you a few seconds to kind of drop some answers in the chat. Feel free to use it. Yeah, I'm excited to see what kind of answers we get.
Did you guys go back to question 1? For me personally, but maybe also some audience members. Thank you.
Oh, I'm sorry. I thought they could see all 6. Okay. Gotcha. So we'll just take a few seconds to answer the first 2, and then we'll jump to the next questions after that. My apologies.
I'm shy.
All right. So are we using the chat? You know, we love the chat.
Thank you, Tyree.
Okay, I got one. All right, don't be scared. Okay, and we're gonna go through all the answers after the questions are presented, but I'm kind of eager to see, you know, what you guys already know, you know, because I know some of this may look familiar to you. So we just kind of want to test your product knowledge. Okay, good answers. Okay, I see Lauren, she's in there. Shelly Gates. All right. Now we're moving on to awesome. Okay, so I see some great answers. So now we're gonna move on to question 3 and question 4. Okay, so question 3, your credit score may impact which of the following areas of your life? And number 4, which of the following is not one of the 3 credit bureaus? So I give you a few seconds to drop those in the chat. Okay, some answers. Do we have anybody new in the chat? I see Tyree, I see Shelly Gates, I see Lauren. Anybody new? Okay. All right, see some good answers. So we're gonna go to 5 and 6. 5, which of the following is most important? I'm sorry, which of the following is the most important factor when calculating a credit score? And number 6, which of the following is a red flag or a sign of a credit repair scam? All right, see some answers for 5. Yeah, I said the same thing. Yeah, number 5 can be a hard one. Okay. All right, all right. So we got all 6 questions answered. Okay, awesome. So let's see how you all did. So we're gonna review the answers, and we'll let you guys know if your answers were correct in the chat. So for number 1, what is a credit score? The answer is C, a 3-digit rating that tells a lender how likely you are to repay debt. Number 2, which of the following is a key method for improving your credit score? That answer is B, pay all your bills on time and in full and never miss a payment. Number 3, your credit score may impact which of the following areas of your life? All of the above. Man, when I found that out, it was news to me. Number 4, which of the following is not one of the 3 credit bureaus? That one is B, FICO. And number 5 and 6, which of the following is the most important factor when calculating a credit score? The answer is A, payment history. I know a lot of us like to think of the amount of debt owed, but it's actually payment history. And that was something that I learned a little while ago. Number 6, which of the following is a red flag or a sign of a credit repair scam? The answer is D, both A and C. Okay. So now let's take a quick poll to see how well you know your personal credit score. So we have 4 options you could choose from, with A being I know it exactly, B, I have a rough idea, C, I don't know it, and D, I don't know what a credit score is. So you can go ahead and drop your answers in the chat. It's no right or wrong answer. We're here to kind of get an understanding, for everybody. So go ahead and just drop that in the chat. Okay, I see some answers. Okay. See some new people. Awesome, awesome. Right, see some good participation here. Okay, perfect. You know what? I'm gonna drop my answer in the chat too. I'm going to drop mine as well. Yep, there we go. All right, awesome. So before we get into why credit scores are important, we want to discuss what are they. So a credit score is a 3-digit rating that tells a lender how likely you are to repay debt. Different lenders use different criteria to calculate it, but in general, your credit score can be considered poor, fair, good, very good, or exceptional. So individuals with a credit score between 579 may face challenges in obtaining loans or credit. Assistance with rebuilding credit history can be helpful for those. Individuals with a credit score between 580 and 669 may have a difficult time qualifying for loans, and approved loans will likely come with a higher interest rate. Credit scores between 670 and 739 will likely qualify for loans and credit cards, but may be restricted to higher than average interest rates. Credit scores between 740 and 799 are very good. And those individuals most likely will qualify for most credit accounts, loans, but may receive the lowest advertised rates. Now, exceptional credit is 800 and above. So if your credit score is above 800, your credit history is usually very strong and will most likely qualify for the best loan terms and interest rates. But how does your credit score affect your daily life and ability to achieve your financial goals? So let's take a look at a scenario. Okay. So this is a tale of two friends, and let's meet Anna and Bella. So Anna and Bella, who both want to get a home. Anna and Bella have been friends since middle school. They're both single, both have steady incomes to pay their bills, and Anna and Bella decide to buy homes in their childhood neighborhoods. Bella receives a loan without any trouble. Unfortunately, Anna has a difficult time getting the loan. When she finally gets her loan approved, her interest rate and insurance premiums are higher than her friends. So now that you know Anna and Bella's story, let's see if we can figure out a few details. So I'm going to ask you a question. So why do you think this happened to Anna? So if you guys can drop your answers in the chat, um, and we'll read off some answers as well, because I think it could be so many different reasons, but I want to see what you guys think first. Okay. Yeah, good answer. Good answers. Yeah, Tyree. That's a good one. Awesome. Yeah, that's always a good answer, Cameron. Awesome answers, awesome answers. And I do want to add, if anybody does have any questions, we'll definitely have time for Q&A at the end. So I'm excited for that too, because I know you guys got so many questions for us, and I'm excited to answer for you. So with so many different possibilities and so many different answers, let me see. So the most simple answer for this question is that Anna just simply had a lower credit score than Bella. So sometimes that will play, it can affect your approval rates. you know so credit scores are not the only factor that lenders consider. Factors such as the market, down payment amounts, loan terms, and lender loan policies can influence the cost of the loan as well. But still, experts and research shows that one's credit score has a large effect on the cost of a loan. So as you're saying, credit scores can affect your ability to get a loan, as well as interest rates and insurance rates. But they also can affect your eligibility to rent a space. So as many property managers check credit scores before renting to unknown persons. So additionally, your credit score can impact your ability to get a car. When purchasing or leasing a vehicle, your credit score will be taken into consideration during the qualification process. Late auto payments can also negatively impact your credit as well. So much depends on this three-digit score, you know. So who actually comes up with the scoring system? I've always. And does anyone know the names of the three credit bureaus? So you guys can answer that question and drop it in the chat. What are the three credit bureaus? So we'll give you a few seconds to drop those. Okay, good answers, good answers. Okay, I got some new people in here now. Yeah. Okay, I got somebody that named all three. Okay, awesome, awesome. Okay. So there are many agencies that prepare credit scores, and they can use different models to calculate them. But however, the most popular score models are FICO and Vantage Score. So there are three main credit bureaus in the United States. You have Experian, Equifax, and TransUnion that you see in the slide. These are credit bureaus, and along with lenders, use their own version of the FICO and Vantage scoring models. The bureaus keep track of your credit history separately, so it's a good idea to use each one of them. If there are large variations or discrepancies among your reports, you should reach out to the bureaus and figure out why. So, what factors are considered in determining a credit score? And the chat is open. It's always open. So you can answer that question, put it in the chat. What are factors? What factors are considered in determining your credit score? Yep, that's a good answer. That's definitely a good answer. Amounts owed, payment history, number of accounts, absolutely. Yeah, I really like these answers. It's so many factors, so many different ones. Okay, so now good answers, good answers. So as mentioned earlier, oh, you know what? Number of inquiries, absolutely. 100, absolutely. Yeah, you guys got some real good answers. So as mentioned earlier, different credit bureaus calculate your credit score in different ways. While the bureaus do not disclose the exact methods or formulas they use to calculate your score, we do know that the general factors they consider though. So let's take a deeper look at these factors and how they can affect your credit. So the first one, I think I heard this, is payment history. Payment history typically accounts for approximately 35% of your credit score. This primarily includes looking at whether you pay your bills on time. Do you always pay at least a minimum amount? If you do, then you're in good shape. If you make even one late payment, though, it will likely have a negative impact on your score. So that's why it's so important that you always pay your bills on time and at least pay the minimum amount you owe. So when you do so, it doesn't have that big of an impact. Amounts owed. Amounts owed typically account for about 30% of your credit score. The amount owed depends on two factors. Those two factors are how much you actually owe on your credit cards or loans. Owing money doesn't necessarily mean you're risk to lenders. The most important thing is showing that you make your regular payments on time towards your debts. And the percentage of your available credit that you're using. So typically, people who are using less than 30% of their total available credit will be a lower risk for a lender than people who are using 90% of their available credit. So simply to put, maxing out your credit card can negatively impact your score. So you always want to keep your usage, around 30% or lower. Length of credit history accounts for 15%. Yes, length of credit history accounts for 15% of your score. Credit history is determined by how long you've been managing credit. The longer your credit history, the more information a lender has about your payment habits and your reliability. People with a short credit history, even if it's steady and good, may still be at a disadvantage because lenders may consider them to be higher risk. So it's important to build and maintain good credit early. Another factor is new credit or credit you recently applied for. Typically accounts for 10% of your score. So each time you apply for a new credit, a lender runs your credit score. This temporarily decreases your score. it signals that you might be using too much of your available credit. Now, there are limits to expectations. So, for example, applying for many mortgages to buy a house in a short period of time doesn't really tend to affect your score negative. So it's always a difference sometimes. And then the last factor is types of credit or credit mix. And that typically accounts for approximately 10% of your score. So credit mix is a term used to describe the different types of credit accounts that you may have. While as while it's not as important as other factors, maintaining a diverse set of installment and revolving credit accounts can help you take your credit to the next level. Also, demonstrating that you can responsibly manage different types of credit can indicate that you're a reliable borrower. So credit scores are completely, I'm sorry, credit scores are extremely complex. And your actions every day, your everyday actions, they can influence your credit score, they can influence your finances. So, how about someone else's actions? Can they affect your credit score? So, many people think that co-signing on a loan is a helpful action to take, especially if the person is your child, your significant other, your parent, or even a close friend. Um, Similarly, many married couples or people in long-term relationships decide to merge their finances. Now, it's important to know how this decision may affect your credit score. So let's take a look at a few scenarios and just see how co-signing and merging finances and sharing lines of credit can affect your score. Okay. So now we're back to Anna. So Anna just bought a new house, but it's further away from her old apartment. I'm sorry, but it's further away from work than her old apartment was. She needs a new way to get to work. She would like to purchase a new car. She's taken some steps to improve her credit and now is eligible for a car loan. Anna wants to use the loan to get a new car, but she has a problem. She needs someone to co-sign. So should her best friend Bella co-sign on the loan for Anna? So I want you to drop that answer in the chat, yes or no, should she co-sign? But I also want to know why should she co-sign and why shouldn't she co-sign as well? So I give you a few seconds to answer that question. Heck no. Right, yeah. See some good answers. Let's see. And you know what? Has anybody ever been asked to co-sign? You know, because honestly, being asked and needing a co-signer is not all bad. I know sometimes it may get a bad rap, but it just really depends on the scenario. You know. Okay, I see a good answer in here. No, because it may affect Bella's score. Gotcha, gotcha. Yep, two people have been asked. Okay. Okay, perfect, perfect. So, okay, Bella can help Anna with an approval rate, but could negatively impact if Anna doesn't pay. Wow, okay, that's good. That is awesome. So I'll go ahead and read the answer here. So while co-signing on a loan may not necessarily impact Bella's credit score, the loan will still appear on her credit report. So there is no right or wrong answer, but Bella's credit will be impacted negatively if Anna does not pay her loan on time. So when you co-sign for a loan, you're promising to repay a loan, even if the other person does not do so. So, but if Anna pays off her loan on time, it could actually help improve Anna's and Bella's credit score. But if she does not repay her loan or she misses a payment, then it'll affect both of their credit scores negatively. So that's why sometimes it's a touchy situation, and it really just depends on, who the person is and what the scores are. So applying for a credit card, I'm sorry, applying for credit on your own with someone else can affect your credit score. So just be mindful of your own credit score before making those decisions to co-sign on a loan or merging accounts with someone else. And adding an authorized user to a credit card is also a common way to share credit as well. But keep in mind that the primary cardholder is responsible for paying the bills. So if you both use the card responsibly, it can increase both your credit scores. However, adding an authorized user can be a risk for the primary cardholder if the authorized user overspends. So I've been in that situation where, I was a little younger. I was 18. My mom made me an authorized user, put me on a credit card. At that time, nobody explained credit to me. So I'm 18 years old. I thought credit was free money. So I probably ran a card up maybe about $2,500. She got the bill. She thought it was fraud. But they ended up telling her that no, it was your authorized user who, spent the cash. And then that is when I had to really sit down, and she gave me a real stern talking to about how credit works and about how her money is not my money. That card was only supposed to be used for emergencies or, things like that. So I just bring that up to say that when you have an authorized user on your account, whatever they do can affect you. And if you are co-signing or have a co-signer, whatever that other person does can affect you. So in those scenarios, you really have to be careful and, think about it and really kind of know what you're getting yourself into and make some conscious decisions, and really just always know the person and know your product knowledge as well, So with that being said, I am going to pass it off to Jess to discuss credit reports.
Thanks, Ricardo. And I think we all have that first credit story experience that we all learn a lot from pretty quickly. But that's a perfect segue into our next topic, which is what about credit reports? How are they different from your credit score? Your credit report is a snapshot of your credit profile, including the history. Every time you take out a personal loan, apply for a credit card, those actions get notated on your credit report. It's important to make sure that you're reviewing your credit report regularly. It's one of the tools that'll help you build and maintain good credit. The 3 nationwide credit bureau reportings calculate your credit score based on the factors that affect it. Many people wrongly assume that checking their credit score or report will affect their credit score negatively, and that's simply not true. In fact, keeping an eye on your credit report can help you in many ways. It can help you detect fraud and maintain or work towards a better credit score. We are all eligible for one free credit report from each of those 3 different bureaus that Ricardo mentioned earlier each year, either online or by phone. To get your free annual credit report, you can go to the annual credit report at www.annualcreditreport.com, which is the only website that is federally authorized to give you your credit report for free. Also, the Federal Trade Commission maintains it. You can also request a credit report for free via telephone at 1-877-322-8228. We'll be sending you guys out a copy of the participant guide after the end of the session, and we'll have all of those details included in that participant guide for you to access those credit reports. It also has step-by-step actions to take to get access to those reports. Because you can only request your Equifax, Experian, and TransUnion report for free once per year, think about when you access those reports. A good practice is to space those requests out so you can maintain or keep an eye on your credit report every 4 months. So guys, I'm going to ask a question. Please answer in the chat. Do you guys know of any other instances where you can get access to a free credit report? Okay, so I see some good answers in here. Yeah, so you're entitled to one extra free credit report under certain circumstances to verify information. So I believe I saw fraud in the chat. So if you review your credit report and notice inaccuracies as a result of fraud or identity theft, you can request an additional extra copy of your credit report. Denial of credit. So if you do go apply at a financial institution for a loan or a credit card, or if you're declined for insurance or employment, if that denial was based on your credit report, you can request an additional copy for that. Unemployment. If you're unemployed but plan to look for a job within the next 60 days, you can access your credit report to ensure it's accurate before applying for jobs. And also, if you're on welfare, you do get the opportunity to request an extra credit report every year. So now that we know more about credit reports, let's find out how you get your score. So credit scores, unlike your credit history, are not currently included in your free credit reports that are available. You can get your credit score by requesting it from various companies, including the different credit bureaus. These credit scores can be used to be available if someone, such as a potential lender, has also paid for them. Now, scores may be available for free from a number of different credit monitoring sites. So some of you might be using those sites today to monitor your credit every day. These activities allow you to check your credit score whenever you want and monitor progress in between those annual credit checks that we just discussed. Once you've requested and received your free credit report, how do you make sense of it? So your credit report will contain 4 major sections for you to review. Make sure that you review each section thoroughly for accuracy. Make a note of any inaccuracies or unknown or suspicious details. And we'll get into how do you dispute those details here shortly. There's 4 major sections in your report: personal information, public records, credit accounts, and credit inquiries. Personal information is the section that contains your name, date of birth, social security number, address, as well as the name of your spouse and your employer. The public records section contains information about bankruptcies, judgments, and any delinquent or unpaid taxes. Credit accounts. This section contains information about your debts, whether you've been paying your bills and loans back on time, or if you've been missing payments or are at risk for a delinquency. It can also include information about open and closed accounts. Credit inquiries. This section includes the information about organizations, people, or agencies that have requested to verify your credit, and those will be maintained on your credit report for up to 2 years. There's some other information that you may be looking for that won't be included on your credit report. Medical information, information about your checking and savings accounts, any information about debit or prepaid cards, or any private loans that you've received from benefactors, friends, or family will not be included. If you guys are interested in seeing a sample of a credit report, and aren't quite ready to look at yours, you can view one online by doing a quick search on the internet. You can either access a sample from Experian, TransUnion, or Equifax. They all have sample credit reports on their website. Requesting and reviewing the information on your credit report is the first step to maintaining or building healthy credit. What are some more important things that we can look out for? Let's find out. It's important to review your credit report regularly to make sure the information is accurate and up to date. Your credit report contains information about your credit history and helps you manage your debt. It can also be affected by public records such as bankruptcy, unpaid debt or bills, or how much of your available credit you're using. Most of these types of information will remain on your credit report for up to 7 years. Bankruptcies can remain on your credit report up to 10 years, and certain tax liens will remain on your credit report indefinitely if they're not paid off. So when you're looking at your credit score, some of the dates that you're going to want to look at carefully is the date that your accounts were opened. Remember, as Micardo said earlier, the length of your credit history account part is a part of your overall credit score. So you want to make sure that the opening date and the closing date on your accounts are listed correctly. Dates of delinquency. Review delinquent loan accounts to check that the dates are accurate and less than 7 years old. Dates of public records. Any public record or legal activity should be erased from your credit score after 7 years or 10 years for bankruptcy. And dates of your credit requests. As we said before, those inquiries make an impact on your overall credit health as well. So whenever anyone, a lender, a financial institution, a homeowner requests your credit report, your credit score may be affected. So check the dates of those inquiries to make sure that they correspond with the events. If you have noticed any errors, you can dispute those errors directly with the credit bureaus. Reviewing your credit report thoroughly is a good practice. If you come across information that's incorrect or fraudulent, you can take action. There are some steps that you can take if you need to dispute items on your credit report, and we'll review those steps here. So 1, you can write a letter to the credit reporting agency. You can tell the credit reporting agency what items that you think are inaccurate. When writing your letter, make sure that you include copies of all documentation to support your position. The letter should include your name, address, copy of all items in question, and a copy of your credit report with the items that are in question circled. Send your letter by certified mail and request a return receipt. I cannot stress how important this step is. By law, credit reporting agencies must investigate items in question unless they consider your dispute to be frivolous. Sending the letter by certified mail with return receipt ensures that once they receive your letter, that it will be addressed. Wait for the results in writing. When the investigation is complete, the credit reporting agency must give you the results in writing along with an additional free copy of your credit report with those disputes changed. 3, send a letter to the information provider. So the information provider is the person, company, or organization that provided you the information about the credit reporting agency. Make sure you let them know that you disputed an item with your credit report as well. Include the same information. So your credit report, a list of the disputed items, and a clear statement of your reasons on why you're disputing. Again, you can include copies. I would not send originals of any documents that support your request for correction. And you can, again, mail those via certified mail with a return receipt to ensure it's been received. So guys, toss your answers in the chat. Has anyone here ever been or had to make a dispute on their credit report or noticed any errors that they've needed to address with the credit agencies or with a banking institution? Yeah, so it looks like we have quite a few people that have had to dispute transactions or information on their credit report. So that's why it's so important that we're taking advantage of all of the access to our credit reports to ensure that the information is correct or up to date. Um, it sounds like Sharon might have had to have a little, she had hers worked on. I see a couple of other people that said, yes, they've had to dispute as well. So you guys can understand how important it is to make sure that that information is correct, because it does impact so many parts of our lives, whether it's making purchases through credit, applying for jobs, getting new, car or home insurance. So definitely a large part of our everyday life that we just need to make sure that information is accurate for when we need to make those life changes. So speaking of life changes, if you've been through an unexpected life event, there's steps that you can take to reestablish your credit if you've had challenges in the past. They're very similar to how you establish credit. So some things that you'll want to do is monitor your credit reports and scores. You'll want to pay your bills on time and regularly. Nothing builds credit faster than regular, consistent payments. Get credit counseling. Not-for-profit agencies advise people on money and debt management. They can help you create a financial plan, and they offer credit building workshops. You can also consider financial products. As discussed, getting a loan or secured credit card can help you build your credit. However, there may be trade-offs, such as fees, minimum deposit amounts. So you want to understand and ask the financial institution about those terms and conditions before applying. The Credit Repair Organizations Act helps protect all people and their rights, including preventing credit repair organizations from engaging in deceptive practices, such as false advertisement that could eventually harm you. In other words, credit repair organizations may not overpromise, for example, to delete all of your bad credit, regardless of whether it's a legitimate debt that you've accrued. Also, credit repair services cannot demand advance payment. They must put contracts in writing, and they must offer consumers cancellation rights on their contracts. In this next section, we'll identify some potential scams for credit repair companies. So let's return to Anna. She's trying to rebuild her credit, but she's having trouble keeping up with her credit card payments. She researched several credit repair companies. Let's see if we can help her recognize the good from the bad. So guys, go ahead and read through and drop in the chat any red flags that you see here. So Anna's trying to rebuild her credit, but is having trouble keeping up with her payments. She researches the several credit repair companies. The first company promises to remove bad credit information from Anna's report. All she has to do is pay an upfront fee. Anna's worried about her bad debt, but the company assures her that it can scrub all negative information from her report. The company also advises Anna not to contact the credit bureaus directly, since doing so will negatively affect the company's efforts. So what red flags do we see in Anna's scenario? Yeah, definitely paying an upfront fee. It does sound very predatory. Yes, yeah. Not to contact the credit bureaus directly is a huge red flag. Yeah. So, guys, drop in the chat. How many red flags did you personally see in Anna's situation? Okay, so we've got two, three, three again. Three's popular. Okay. All right. So everyone was so close, but there is actually four. So red flags include that the agency promises to remove all bad credit, that they're asking for that upfront fee that was mentioned, that they advised her not to contact the credit bureaus, and that they can scrub all negative information from her credit report were the four red flags. So this gives us all some really helpful information that we can use when working with credit repair bureaus. So Anna should not trust the company's promise to remove her bad credit for an upfront fee. According to the federal credit repair organizations, credit repair companies must successfully remove the credit inaccuracies from an individual's report and provide proof that the report has been updated before they can request payment for their services. It can take up to 6 months to complete that request, so it's a huge red flag. Anna should also be suspicious of any company that promises or guarantees to remove all bad credit information. Anna should not pay any upfront fees or before the services have been delivered. And she should not trust a company that promises to remove negative credit that is legitimate. Credit repair companies can only remove credit information that is incorrect or a result of fraud. So again, if a company requires you to claim that accurate information as negative on your credit report, it's false. That's a huge red flag. Anna should not trust any company that recommends or advises against contacting the credit bureaus as well. So to recap, there's many red flags that you can use to spot a credit repair scam. They again include requiring upfront fees for credit repair services, promise to remove all negative credit information from a credit report, offering to scrub or alter legitimate credit information, and instructing you not to contact the credit bureaus directly. You are all entitled to dispute errors for free, and it's your legal right to do so. So a couple of other red flags I wanted to review with you is asking for a signature on blank paperwork. If an agency ever asks you to sign paperwork so it can act on your behalf, it's a scam. Never sign paperwork, especially legal paperwork, without reading it thoroughly, ideally with the help of an attorney or lawyer. Credit profile number scams. So promises of a new credit identity by issuing a new credit profile number or credit privacy number that is similar to a social security number is also a scam. And then again, fake social security number scams. Any agency that encourages you to use a fake social security number or apply for an employer identification number for tax purposes is a scam. EINs are typically used by businesses, as you all know, and not individuals. Credit repair companies can help you spot and remove incorrect or fraudulent information on your credit report. Credit counseling agents can also help you improve your credit report. If your credit report is poor, you may consider taking advantage of credit counseling. Many agencies offer a free initial session, and these agencies can help you create a financial plan to decrease your debts. In the participant guide that we'll be sharing with you after, There is space for you to list out your debts and start building your own debt management plan. We would be happy here at KeyBank to help support you in building your plan, and we'll share some different ways that you can contact us for additional support. Some other participants you might want to bring into the conversation would include family members or any like business partners for business credit, just anybody that is also impacted by your overall credit. So if you do choose to use a credit counseling agent, look for agencies that are accredited with the National Foundation for Credit Counseling or the Financial Coaching Association of America. And we'll have this information shared with you after the session as well, so you have access. Look for services such as better money management techniques, debt reduction strategies, and financial plan development, as well as get information about their services, any potential fees before paying anything or providing them any financial or private information. So, what are some other ways that you can improve your credit? What are other steps you can take? Go ahead and drop some ideas in the chat. Any other strategies you can think of? Yeah, using a budget. That's great. Setting aside your wants and your needs, and then making sure that you have extra funds that you can set aside for debt management. Applying for a secured credit card. That's great. So I asked, what other strategies can you or steps can you take to improve credit? Yeah, be diligent in paying debt down. That's awesome. Yeah, great. So we've covered a lot of different things in our session today about what could potentially affect your credit score. The good news, a few good habits and strategies around managing your credit and debt can go a long way to helping you create it and maintain a high credit score. So here's some basic strategies. Use your available credit wisely. As Ricardo mentioned, using 30% of your available credit is the best number to stay near. Don't max out your credit cards. Make sure that you're keeping 30% or less of that available credit. Pay your bills on time. Pay off your credit card bills each month in full if possible. Doing so shows agencies that you're responsible, and it also lowers the total amount of money you owe. If you can't pay off your credit card balance each month, or if you have challenges remembering to do so, helpful activities that I've used in the past or clients of mine have used is making sure that you're writing those due dates down on a calendar or in your phone calendar to set those reminders to make sure that those bills are paid on time. Paying off your loans on time. Not only does defaulting on your debt cost you fees, but it'll also quickly damage your score. Do not apply for several credit accounts in a short period of time. So those, multiple inquiries for different credit accounts could be, damaging to overall score. Make sure that you have a financial plan in place or a debt management plan to help you pay down and reduce your debt. Create and follow a monthly budget. So making sure, again, that we spell out what are those needs that we have, those things that we must pay. Also writing out what are our wants, like, hitting up Starbucks or Dunkin' Donuts every day. That's definitely a want, not a need. Just making sure that you're documenting those, those things that you're spending on each month, and making sure that you have a good balance that you can set aside money for either saving or paying down any debt. And then periodically reviewing that credit report, like we discussed, to make sure that it is accurate. So being mindful of your spending and monitoring of your credit are good habits to develop when you're building and maintaining credit. So your credit report is something that can affect your entire financial life, as we discussed. So you want to make sure that you take really good care of it. A good credit score can help you achieve more of your financial dreams. If you have bad or poor credit, don't be discouraged. Keep track of your credit report on a regular basis and adopt some of the credit habits that we just spoke about so your credit score can be as high as possible. It can be an uphill battle and it may seem like it's taking a long time, but making these small changes now can have a huge impact later. So guys, in summary, we learned the importance of the credit scores and reports, how to access your credit reports, how to identify strategies to build and improve your credit, and how to protect your credit from incorrect claims and fraud. So we're going to ask you some questions to understand the knowledge that you learned today. So go ahead and either write down your answers to the questions or drop answers in the chat. So guys, the first one, what is a credit report? It's a snapshot of your credit profile or including your credit history. B is a 3-digit rating that tells a lender how much money you earn annually. C, a 3-digit rating that tells a lender how likely you're to repay debt. Or D, a report that tells the IRS which tax bracket you belong in. What do you guys think the correct answer for question 1 is? All right. Moving on to question 2, which of the following is an important method of improving your credit score? A, apply for and take out as much credit cards as possible. B, pay all your bills on time and in full, never miss a payment. C, request that your credit history not be reported. Or D, always use prepaid cards instead of debit or credits. All right, looks like we've got a couple of answers there for 2. Okay, moving on to question 3. Which of the following is potential consequence of a low credit score? A, difficulty securing a loan. B, difficulty paying taxes. C, difficulty with opening a savings account. Or D, all of the above. Right. Great. Question 4, how often can you request a free credit report from each of the 3 credit bureaus? A, once a month. B, twice a month. C, once annually. Or D, twice annually. All right. Yep. Good. Moving on to question 5. Which of the following information is included in a credit report? A, personal information. B, public records. C, credit accounts and inquiries. And D, all of the above. Oh, I see some fast responders here. Great, good. And question 6, which of the following is a major benefit of the Credit Repair Organizations Act? A, that credit repair organizations must offer consumers contract cancellation rights. B, that credit repair agencies cannot demand advanced payments. C, credit repair agencies must put controls in or contracts in writing. Or D, all of the above. Okay. Yeah, I see a lot of participation here. So let's get you all the answers. I know you're on the edge of your seat. So for question 1, a snapshot of your credit profile, including your credit history, is your credit report. Question 2, methods for improving credit score is paying your bills on time and in full, never missing a payment. Question 3, which of the following is potential consequence of a low credit score? Difficulty with securing a loan. Definitely, answer A. Question 4, how often can you request a free credit report from each of the 3 credit bureaus? You guys, I saw a lot of C's popping up there. Once annually. You guys are correct. Question 5, which of the following information is included in your credit report? Absolutely, I saw a lot of D's in here too. It's your personal information, your public records, and your credit accounts and inquiries. And question 6, which of the following is a major benefit of the Credit Repair Organizations Act? It's all of the above. I saw a lot of D's there too. You guys did great. So credit repair organizations must offer consumer contract cancellation rights. They cannot demand advanced payments, and their contracts must be in writing. So I can definitely tell by your answers that you guys learned a lot from this session today. So thank you for your participation. We're going to go ahead and open it up for any questions that you might have.
Thank you so much. We do have a couple of questions pending. So for anybody who has questions, again, there's an app at the bottom of your Zoom screen that says Q&A. You can just click on that and add any questions and we'll make sure to address them. We have a question from a while ago in the chat that I wanted to be sure to address. Jessica said, I've heard that you can improve your credit score by paying half the amount 2 weeks before the due date, then the remaining amount 3 days before the due date. Is this accurate?
So that's a strategy that can be used to pay down balances faster. So if you are able to, reduce the overall loan balance, overall, it will decrease the amount of interest that you pay. And all of those different things can impact your credit score. So yes, it is a good practice if available.
Yeah, and I've used that practice personally in my life, and I've actually seen my credit score go up. So for an example, whereas if I'm paying on one of my accounts and my score may go up 1, 2, 3 points, I've noticed that if I make multiple payments on the same account, when it's time for my score to go up, when that account reports, it does add a few extra numbers. So instead of going up 1 or 2, may go up 7, so it really just depends. But that strategy actually does work though.
Thank you. So very nuanced. So it was a great question, great answers. Thank you. Jeanette asked, you sort of addressed this, but I wanted to circle back to it and see if there was any more depth. She is wondering about what organizations can help. I know that there used to be local organizations. You mentioned a couple of national ones. What are some options?
Yeah, definitely. So the first person that I would talk to, and I'm a big advocate for having your own personal board of directors. So the first place I would start is working with your banker, who should have a seat at your board of director table. So if you do get access to that free annual credit report from one of the bureaus, we would love the opportunity to take a look with you. And then we can give you some guidance on some ways that we can help improve your score report. And we can also introduce you to some local agencies. Lauren, I think we can collect a few and share those in the information we'll be sharing after. But definitely, I think the first place is to start with your trusted banker.
Amazing.
And
Thank
then
you.
there are those two national ones that we referenced in the session.
Awesome. And then you sort of alluded to this. Is this something they can just bring up with their regular key banker?
Yes, absolutely. All of our branch colleagues are very proficient in helping their clients achieve their dreams. And as we talked about today, credit is a large portion of that, even just outside of making those, large purchases. So we absolutely would love the opportunity to sit with you one-on-one and really understand what are your financial goals and dreams. Understand, if you do have concerns about your credit, what they are, and then help you build that plan to get you to those dreams that you're looking at. So Ricardo is our branch manager at our Chester 36 branch, right down the street from the new JumpStart location. So he is available at any time for phone or in-person meetings for one-on-one guidance. We also, Lauren, I believe you're going to share the event on the 26th, so I won't steal your thunder there. But we will have the opportunity for you to also meet some of our other great teammates as well.
Amazing. Thank you so much. As of right now, we only have one more question for you folks. Patty is wondering, should you use debit or credit cards for everyday purchases and why?
So that is, and this again, it all depends on your goals and really your risk tolerance. So for me personally, I prefer to use credit for a few different reasons. For fraud protection. How many of us have gotten that dreaded statement from our bank account or our credit card, and we're like, I did not do that. Like, it's happened. So I think that, with credit, it's not money that's sitting in your checking account if you would have used debit. So really, the credit company is really disputing that transaction without it affecting the money that you have to pay your bills each month. So I absolutely love credit for fraud protection purposes. Also, the utilization on your credit, the making transactions and then paying them off or paying them down each month is keeping that credit going. I think, some of the clients I've worked with in the past have gotten to a point in their life where they're like, I don't have any more major purchases to make. I'm not going to use credit anymore. And they forget about all of the different reasons why credit is used. And when they go to, if they have an emergency, a financial emergency, or a change in their life and they need credit, then it can be a challenge if they don't have that regular utilization and making transactions or payments and then paying them off. So again, just keeping your credit utilized, responsibly utilized, is a great aspect of using credit over debit. And then also too, depending on the cards that you use, a lot of cards offer some great rewards programs. I know I participate actively in a 2% cashback program at KeyBank. So every purchase that I make, I get 2% cash back in with no cap. So, being able to use those rewards for whatever is important to you. We kind of use ours as a way to jumpstart our holiday spending. So we know in December, we've already got a pretty hefty balance for those very expensive Christmas presents for those 3 boys. So those would be my top 3 reasons to use credit over debit. But if you don't have credit established, again, you do have a secured credit card option that you could take advantage of, or you might have to start by using debit as you build that credit. So those would be the reasons, I think, debit and credit.
Yeah, and I would agree with Jessica. I mean, she pretty much said everything I was gonna say.
I read your mind, Ricardo.
Right, yeah. And I'll just add that you can't build credit if you don't use credit.
Mm-hmm.
Because I mean, honestly, as an example of, you could be you could be approved for $1 million line of credit, but if you never use it, a um institution can't see your history of it. You know, if it's just there, they don't see any payment history, they don't see any utilization. It's just been there. So you can only build credit by using credit.
Yeah, and another thing to add on to that, Ricardo, too, is if you guys do have that credit account that just sits there unutilized, then depending on the requirements of that card company or institution, they may close your card if there's no utilization in a certain time period. So then again, we learned today important dates when you open and when you close. So if it closes in a very short period of time, or in a couple of years, that's going to impact your overall credit score, because now you have a short-term credit card that's been opened and closed.
Great, that makes a lot of sense. The next question is about debt, which we are talking about debt management next week. So I guess we can answer this question through the lens of how it affects your credit specifically. The question is, should you settle your collections for less or pay them in full in terms of how it affects your credit?
Yeah, so I would say definitely attend next week's session. We're going to really talk a lot about debt management and making those decisions. But ultimately, I would want to learn more specifics about the loans, the terms, the institutions before really giving guidance on that. I'd want to learn more about the specifics. So again, Ricardo is available if you'd like to gather the information, and he would be happy to give you a one-on-one consultation.
Absolutely, absolutely. And of course, everybody's situation is different and every creditor is different. So it's really no cut, yes or no answer to that. It just really depends. So that's why it's always worth sitting down and taking a look at it and just seeing what we could do.
Wonderful. Well, before I talk about those 2 sessions that we keep alluding to, we actually do have a question of asking for Ricardo's contact information. So you can either put that in the chat, Ricardo, or we can send that in the follow-up email, whatever's easier. But before I talk about those 2 sessions we keep talking about, I want to thank you both so much, and thank the attendees today for engaging with the topic and taking the time to do this work. It is not always sexy, but it is so, so important. And you really should give yourselves a pat on the back for making the effort to talk about these things and examine these things. So speaking of continuing to talk about and examine these things, this is only the first in a series of 3 webinars that we're doing with KeyBank. So the series continues next week on Wednesday the 12th regarding debt management. And then the following Wednesday on the 19th at 11:30 is on budgeting and using funds wisely in your business. So you do have to register for each webinar individually to get the join link, and Cameron has put those in the another representative from KeyBank we are honored to work with. Cameron has put those links in the chat for you to click and join if you haven't, and click and register if you haven't already. We also have one the following Wednesday that is an appointment only sort of speed dating with a banker situation. So these personal financial wellness reviews, those are going to happen here at JumpStart in our lovely new building. And you just have to book your appointment in order to get one of those slots with a banker. So it's ask me anything. So that, it looks like Ricardo, did you put your contact information in there?
Yeah, I did. I left a word out, but yeah, for immediate assistance, you can call the number, but you can also, my information will be in that follow-up email as well. But if you need to even contact me today, that number, you can reach me with that number.
Tremendous. On that note, at the end of today's session and in the follow-up email, you'll receive the slides, you'll receive the recording, you'll receive this wonderful resource guide that KeyBank has furnished to us, and you'll also receive a brief survey. We really appreciate your feedback. Like I said, it allows us to continue to deliver a high quality of educational content with high quality subject matter experts. So thank you again to KeyBank. I look forward to seeing you again next week, and I look forward to seeing everyone else there too. Thank you for coming.
Thank you.
Thank you all.
Take care.